Hello, hello, hello. Good morning, everyone. How is everyone doing? Good morning, Patrick. Good morning, Martinez. This is a green day today. I'm still expecting more upside, but aggressively, my recommendation from my perspective is aggressively trail a stop into these levels. Good morning, George. Good morning, Jacob. Morning. Yes, I figured what you said. I can't type either in the morning. Good morning, Dave. Grand Rising, Christoph. Good morning, options 22. Oh, no. Santa. Sorry, I'm not coming this year. What? No Santa? Is that just for the Santa rally? Or is that just Santa's not coming? Because then there's no point. Ho Ho Day is my favorite day of the year. Ho Ho Day. Good morning, Anissa. Nike potential double top and gap fill. Yeah, we'll tell you we can peek. We can peek in at Nike. By the way, we're all saved. No Santa and no rally. Don't ruin my year. Next year is going to be a doozy. I need Santa this year. I don't need the Santa rally. The Santa rally probabilities stay, but it could just be a little minor bounce. But no, not count on it. Now, if Santa does not show up and there are no gifts under the tree, then I'm going to be a very unhappy person. Charcoal in the stuff. You guys, what is going on, you guys and gals? Who's here? Let's vote for Santa. All right, we're all saved for next year, though, because the email I got this morning, and this is how I'm going to base my investment decisions. And if you don't understand that sarcasm, then you're on the wrong channel. 52% of their readers voted bull market next year in 2023. I'm going full-blown bear. That means, you know what? Yeah, it was a little look. It's pretty close. It's pretty close, but people are still too bullish. Well, you can just go and delete that. Things out this morning. What was out this morning? The mortgage crap. Nothing much. The only thing I'm gonna keep sort of an eye on is at 9 a.m. 9 a.m. Central Time. Gotta let Santa know what time I'm in so he doesn't skip over my house. Consumer confidence. That's about it. Then, of course, the EIA numbers for oil and energy traders. Do not forget about those. And very quiet day other than that. Also, let's just jump to this real quick. We're still in negative gamma. Can still, by the way, there's what's the massive collar strike for? It's 38.35 is a Morgan Stanley massive collar strike. So things could get, they have to buy it. They're actually reverse hedging that. So they have to essentially buy if on any dip down to 3,800, but below 3,800 it gets very interesting, and below 3,800 we drop into significant negative gamma. Why I'm pointing this out also, remember the rally to the upside, gamma flip is roughly just above 3,900, 3,926. So the negative gamma loses steam on any rallies, and then if you do get above 3,926, you're technically tipping into positive gamma mode, which is dealers are selling more aggressively into the rally. Just keep pointing that out. All right, we're done there. So what else do we have? Pretty mixed morning, but a lot of green this morning. Oil rallying, watching for it to hit the 50 now. Your mega caps trying to bounce a little. We have in the sectors, of course, energy, but then consumer cyclical. It's a little defensive is lagging. So gonna keep an eye on some continued upside potential. The 25 basis point for Fab First is climbing. It's 73%. Fear and greed still in fear mode. Earnings this morning, they're nothing that's going to be market moving. If anybody wants me to look at something, I will. Just don't forget, from a semiconductor perspective, Micron after the close. All right. Where do we sit? 2020. I actually think I agree with this, George. I am agreeing with this. 2022. What an awful. It wasn't awful. It wasn't great, but I think 2023 is hold my beer year. Yep, 2023 got laid off already. Rich is going for a full blown depression. Good morning, Stafford. I love gaps because I love the probability of them filling, except when I'm in longs and don't want the gap filled. So you only want the gaps to fill that you want to fill. Let's rip to 3,900 and get this over with. Is it just ripping off the Band-Aid? All right, I updated some key levels. What I am watching for here, by the way, we got the 4-hour pausing bar. That's why if you see any levels updated, this was the 4-hour pausing bar, which is a much stronger pausing bar. 38.74 bouncing there, and then we got the 38.82 area we're bouncing off of this morning, and the 4-hour rotation zone. So this is key, this 38.82 to the pre-market highs of 38.84 is key. I'm watching the little 1-hour rotation zone on any pullbacks, but the next push, if we do get the next push higher, again, it's aggressively trail stops in my book. Why? There are a lot of stopping points. You see even on the 4-hour, 38.97, 39.11, 39.34. If we check in on the daily, with cycles turning up. The key areas are 39.11, 39.24, and then roughly that'll keep coming down about 39.36. So that's what I'm saying. If this rally is going to continue, there's a lot of overhead resistance is running into. Again, I'm watching. Today we've so far broken yesterday's high. If we close above this and don't hit the rotation zone, we could still see a bit more follow through. But this is not a time to get complacent. All right, on pullback levels, besides watching the 1-hour, I'm focusing on the bottom, about 38.66. Below that, my major line in the sand is 38.57. If we start breaking 38.57, I'm really going to focus back on some more on a bearish pullback. And then my key target area would be about 38.44 to 38.34. So that is the way I am structuring today. All right, the NASDAQ. Come on, NASDAQ. NASDAQ still stalled out at the first double target. 11,248, 11,250. Still utilizing these targets to the upside. Let's get to that 4-hour. Because the key area, you have the breakdown zone from over here, you have the 4-hour rotation zone, and you have the target from the double. So we break above this 11,250, 11,278.50, and then the major target area is 11,300 to about 11,308. Now, if it does continue beyond today, the next major level I'm utilizing is 11,400, 11,400 to 11,415 area. That just takes us not even to the key breakdown level. The key breakdown level, if you're playing along at home, key breakdown level, I'd ratchet it down just a bit and focus on this key close from Thursday the 15th, 11,457, but it's really a zone, 11,457 to 11,502. Pullback level right now, there's no 1-hour rotation zone to focus on. The pullback areas, this is where I'll use the harmonics. So I have a harmonic cluster at 11,180 roughly. We move below there to my target is 11,573, 11,574 to about 126. So that would be my short-term target zone. Then every longer-term viewers know the close below 11, 126, retest of the lows from, yes, from Monday technically. From before the Bank of Japan changed its JGB policy. All right, let's just jump real quick to the spiders and the Qs for those traders. Then we'll loop back around to some other things. Spiders hitting the second target, technically 377.87. Yesterday was 377.85. Watching for some follow through on this one. I'm paying attention to the 4-hour rotation zone. So little area I'm watching for resistance is about 383.50 to about 384.35. Then we have the gap down open price, which will be pretty significant, of 385.18. Then it would be back to, let's shift to that daily. Then we have, then I'd really focus on, even before that gap fill, the daily rotation zone, which is roughly coming in at Thursday's lows of 387.89, even before the gap fill. I'd focus on the first tap of the rotation zone. Still, probability-wise, we do favor, and this little rally would not invalidate the double, so I'm still going to be watching for the next rollover play. To the downside, the key support area I am utilizing is about 379 to 379.20. If you get below there, I'm back to 377.85, and then I'm utilizing the breakdown. Let me just see where the harmonics from this sell-off go to this pausing bar. I just want to double check everything. All right. We got it. So on a breakdown below yesterday's lows, my key target area, it's sort of a triple cluster now. Final target on the double, the harmonic projection 373.80, and the key minor significant level 374.23. So that's my key area on a breakdown. For the Qs, which on any rally, I'm watching the 4-hour rotation zone right here, about 272. Then this is where I have to get aggressive with trailing stops, 272.61 to the upside. And yeah, that 272.61, you see that pausing area on the 4-hour with declining rotation zone and the top of the 1-hour rotation zone. So that's my key target. Above that, I would be back to 274.30. On the rollover play, I mean, right now there's a little gap fill, but the major support coming in about 268, just in front of 268, 268.08, 268.10. Then it would be 266.95. And let's do the same thing, the harmonics, because we got a decent pausing bar. The harmonics, remember, we also closed below 62.5, so I'm focusing on lower prices. But my first target would be 264.91 and then about 263.21. So those are all the key areas I am utilizing: the S&P, the NASDAQ, the spiders, and the Qs. Hey, Connor, how are you doing? Hey, CD, thank you for being here. Good afternoon, Charles. So, the Dow already hitting the rotations on. My next key level I'm watching for is about 33.6. That's my next target I'm utilizing in the Dow. And then on a rollover play, besides yesterday's lows, 33.2686, I'm really focused on a retest on the rollover play of 32.437. For some reason, I am from my, not from a probability standpoint, but I'm leaning more towards this rally will be much shorter lived. Possibly with the numbers that come out tomorrow or Friday. Russell, we talked about. Sterling brought it up yesterday with the inverse head and shoulders. We talked about really nice inverse head and shoulders. First target hit, second target hit, third area hit into this target. You can still utilize this 1778 to about 1780. If it continues above 1780, the inverse will have played out. But here's the next levels. I'll utilize this as a great area to use your reverse harmonics. 1791, look at this, coming in right at the resistance shelf, and then we already had a significant level here, declining 200 on the 1 hour, and harmonic projection about 1796, 80, 1797. So those would be the targets I would utilize if it does continue higher. Key pullback area, let me just check that 4 hour. That 4 hour, I'm going to ratchet this back down a little and see how that falls in with the harmonics. And look at that. Look at that. Look at that. Right at the 37.5 harmonic, lining up beautifully. So that's going to be my key support level, about 1760. If you don't mind, I'm going to take off this and this. It's just in aggressive trailing mode at that point, if you're trying to eke out a couple more cents. But then below that, 1754 and 1748. I don't even need this level on here. That's trying to show a little more of the mindset that I'm utilizing to come up with these levels on the shorter term basis for everybody. The DAX, little follow through here. I'm watching for this to stall out a little higher. But first area is this 14.1 we talked about. Then majors about 14.220. There's not much. Still on a support level. I'm watching between 13.950 and on a closing basis 13.900. I'm expecting the next rollover is going to take the DAX back to about 13.6 with reconnecting with the flat 200. Bouncing right here with the notes. This became way too sloppy to utilize. Just with the reaction here, I'm still going to utilize these couple targets higher should it eke out any more. But this technically no double. You can see it even here with this extended rotation back down. The triple, if you want to verify it on the higher time frame, you can see triple on the 4 hour. So there's nothing. I'm just, because it hit dead on with that target, I'm just going to, if there's anything going on, I'm watching these next targets higher, especially the 114.05. But that's all it's being utilized for. This was technically not a double. What I'm watching for a longer term, though, is now we've softened up the 50. I'm watching for a key break just below the 50 at 113.06 for a bigger pullback, then to 112.03 to 111.09 area. There's just not a lot of great setups in the notes right now. Dollar index, we still do have the potential double. That's the only thing I'm keeping an eye on right now, but it needs a close above 104.53. That's pretty much the only thing I'm watching for. We do get that double. It's technically lower probability because it's against the daily rotation zone. But the final target is we'll reconnect with the 200, which I would not be surprised to see. VIX, looking like we're going to retest this low areas. We got the close back from the 14th, below the 62.5. Little bounce back move. Still, we have the probabilities 1981 to 1895. So that's what I'm watching for. And that could set up a substantial potential double bottom. We're technically there right now. We've technically, remember, we pulled back below that 75. I'm going to flip the targets around to use conservative, but That's something to keep an eye out for. If we do have some kind of massive event, it would need a daily close above 25.84. So we get plenty of warning, but then we could see that would be a pretty big volatility event potentially. Crude. Again, I kept talking about this key high area from the 14th and the 15th. We're breaking above it, trying to break above it right now. If we do get the follow through, I'm watching for this candle body key area. Let me mark it down, show you what I'm watching for. See little resistance ledge from the candle body area and the 50. So about 80, 82, I'll just roughly target 81 right in there. That's about it. The only other thing, yes, is this too low for a potential double? Oh, yep. Too low for potential double would just be the key breakdown zone, which would target this low area then. So that's all that I'm doing with crude. What else do we have? Let's just peek at the euro because this is going to be a trade next year. The euro Japanese yen. Watch for a bounce and then the next rollover play in there. Euro and pound real quick. We'll get to Tesla. Euro still watching for that breakdown below 105.80. The pound watching for the breakdown below 120.80 area. Bitcoin back to sleep. Nothing going on there, but watching for the next shoe to drop. Tesla, we're still watching for a potential bounce. Going to be interesting. Slight gap up today. But any bounces, even more aggressive bounce, watching for sell setups. If we do break below yesterday's lows, 132.55, again, we don't have a great pausing bar yet, but 152.55, the stronger target is 129.28 from the pausing area back on the 22nd of November. So that'll be my next major target lower. I know we were asked about, what was it? Was it Nike? What was the one I was watching for the double? Well, I just blanked out. Or FDX. FedEx, we already triggered the double, which this move has not and hit the first target. Watch for the close above a 176.22. That would take the double as done and only hitting the first target or a trade through 178.95. Nike, which had the earnings yesterday. There was no double, but there now is pre-market. Is this a double? We're going to open up here, so we can test this out now. That's the double you're talking about with the pre-market open. Yes, that is completely valid. So Nike will have, with this pre-market open, a potential double. Also, keep in mind, this could be interesting. Thank you for pointing that out, options 22. Because overhead, we have the declining 50-week. We have major resistance of the 200-week. So if this stalls out up here, I will be watching. We'll have gap fills. And then a potential trigger to return to the October lows. So if you're interested all at that, as long as this pattern does not get invalidated, it should be to set some alerts for a potential breakdown move in Nike. Christoph, according to Elliott, 2, we are in the 1, 2, 3 corrective pattern before we go back down. Jeez. Does the Elliott wave pattern? Is this winter storm that's going to hit the whole Midwest? Is it called the Elliott? I didn't hear the name of it. Did they name it Elliott? That would be funny. You are welcome. We got 1 minute to the open. 1 minute to the open. Let's just peek in. Let's peek in at how it's going. Yeah. The only thing to keep an eye on is here. You do have a pretty decent clear path move to the downside if you start breaking down. Let's see where the tick's opening. And then I do have to jump going into the... Oh, pretty bullish tick today. Off the open. Lots of opening buy orders. Lots of big opening buy orders. So let's see if that's going to get sustained into the open. Remember, watch for the key pullback area between 4 and 600 on the tick. Looks like a little mini double off the open, but not much to look at just yet. Not much to look at in the NASDAQ just yet. Remember, we still have the patterns to the upside, and I am watching for some follow through before the next rollover. With that, I do have to jump. You are welcome, Anissa. Thank you, everyone, for being here. I will be back after the close. Talk to everyone later. Bye.